The 21st century will likely be remembered as belonging to Asia. The year 2021, however, has been a very different story. The world's most populous and fastest growing region has suffered a variety of setbacks over the last 12 months. Asian economies have been slower to reopen than many others, largely because of lower overall vaccination rates. At the same time, the Chinese authorities have pursued a regulatory crackdown, affecting businesses across its economy and shaking global investors' confidence. Given these setbacks, regional equities have underperformed the rest of the world. Could this be a sign of things to come for Asia? We have long argued that the shift in economic power away from the West and toward Asia represents an unstoppable trend. Despite recent difficulties, the multi-year forces driving the rise of Asia remain intact. The middle class is set to keep expanding, with perhaps 1 billion more people joining its ranks by the end of the decade. Urbanization is also continuing apace, with many new cities of more than 1 million inhabitants likely in the coming years. The region is also an increasingly important hub for technological innovation and usage. We also believe that the setbacks of the last year may even create opportunities for Asian and global investors. After a slow start, COVID vaccines are now reaching Asia in large quantities. As vaccination rates in Southeast Asia catch up, we expect an accelerating recovery in 2022, driven by pent-up demand for goods and services. The pandemic has also boosted the adoption of digital technologies across much of this global region. We believe the uptake of digitally delivered education, healthcare, finance, and industrial services is likely to endure long after COVID. In our view, certain Asian countries could become leading centers for a whole range of online services, from teaching to software engineering. If this occurs, it will help spur the next stage of their economic development, moving them away from low-cost manufacturing. China's regulatory crackdown is part of a drive toward what authorities call common prosperity. Their aim is to share the fruits of the nation's rapid economic development more broadly and equitably. The far-reaching measures have unsettled investors and helped push Chinese equities into a bear market. Strange it may sound, China's crackdown may have economic and investment benefits. We believe the reforms could set the country on a healthier path of development towards a more advanced and consumer-led economy. The restrictions on tech companies could lead to a flatter competitive landscape, with innovation becoming more widespread. Likewise, if less savings go into real estate speculation, it could see capital channeled to more productive parts of the economy. In the near term, we look for a better year in 2022, with macro and pandemic policies becoming somewhat easier. In 2022 and 2023, we therefore believe Chinese GDP growth will recover from its depressed rate at the end of 2021. In our view, the case for the rise of Asia remains compelling, and we advise long-term portfolio exposure to this unstoppable trend. As the region's reopening continues in 2022, we look for consumer and discretionary industries to recover, especially in Japan, Australia, and Southeast Asia. We also expect a rebound in China's embattled internet sector, where corporate earnings may improve over the coming year. Aside from the impact of reopening, Southeast Asia continues to offer potential on many levels. The sub-region is benefiting from investment from Japan, China, and the US amid a shift towards more diversified supply chains. The wider Asia region also benefits from the attempted shift away from concentrated risks in Greater China. Ongoing digitization remains another powerful driver of development in Southeast Asia and another reason for our optimism. Nevertheless, many investors remain underexposed to the rise of Asia in their portfolios. Find out more about the opportunities we see in Outlook 2022.